good to have you this morning. I mean, you heard the conversation. Andrew, let's start there. I mean, what are your expectations in terms of the pace of returns, in terms of what an investor ought to do, in terms of tilting one way or the other at this point? We've obviously seen this massive run in value stocks along with the rise in yields.
Yeah, I mean, I think what you said is it's dead on right, Michael, which is the second year of a bull market is just, it's a little tougher than the first year. There's a little bit more volatility, and volatility can be used to your advantage to invest in, to be patient, waiting for bigger pullbacks than you get first year, but it tends to be a pretty good year. I think value has done very well here, and growth is pretty oversold, so I think we're getting a bounce in growth stocks. But in my opinion, that's an opportunity to reload on value names, because I think, Fed Chairman Powell's been pretty unequivocal. It's all about the unemployment rate, getting unemployment rate down. So I think rates are moving higher. And, coming out of recession, you tend to want to own value cyclical stocks, and they're doing exactly what they normally do coming out of recession. They outperform. And so I think that is not over yet.
What about, Andrew, the idea that you're starting to hear a little more out there that value's become momentum, it's become a little bit of a consensus trade, and therefore it's no longer, early in that move?
No, look, it's not. I mean, value stocks got very, very cheap in recession. They've repriced about halfway back to normalized, levels of cheapness, but we're not there yet. So, yeah, the fat pitch was earlier, but I don't think it's too late. And I think a lot of people want rates to stop going up because they're overweight in growth stocks. I think there's a lot of talk about liking financials, but I don't think as many people are overweight financials as like them, because I think they growth's been the winner. So that's going to clearly have a higher weighting in people's portfolios.
Michael, do rates stop going up from here, at least in the near term? I mean, we can have the conversation about treasuries being oversold. What do you think?
Well, first of all, I agree with what Mike said about his term super oversold. I think that's a great way to say it. Do rates go up? I think that rates are going to moderate. I think that right now you're seeing a reaction because of uncertainty what's going to happen with stimulus. How much is going to juice the economy? But we're still targeting the 10-year yield of being around 1.6 at the end of the year. So I think they're probably going to drop a little bit from where they are now. And I think that from an investment standpoint, if you're rotating out of stocks, and I agree with what was just said regarding value stocks, dividend stocks, I think make a lot of sense. But if you're rotating out of equities and you're moving to bonds, because what else is there? I guess you could go crypto or you could go cash, and you're going to bonds. You don't have to necessarily go to ag. You don't have to go to long duration fixed income, something with a 5 duration. You can maybe hedge a little bit, or maybe you go to 3-year duration. Maybe you go to 3.5-year duration. So that way you don't have as much risk if what I've just said is incorrect, that rates in fact do go up. If they don't go up, then at least you've participated pulling out of some of the equity risk and getting higher yields than in money market. So I still think there's a constructive way to invest in fixed income for a diversified investment strategy.
Shepard Smith here. Thanks for watching CNBC on YouTube.